So, we're going to get right on going here. Okay, we got you there. Okay, so a lot of us who are here, especially creators like myself and Carla, builders, we focus on the grassroots, the bottom-up adoption. But that top-down adoption is equally as important, and we need people who are working from the top down while we work from the bottom up so that hopefully we can meet somewhere in the middle. So next, we have sovereign adoption of Bitcoin, a probability-based approach. I'm going to introduce Matthew Sigel. He's the head of digital asset research at VanEck. They are an $80 billion asset manager, so truly has some clout coming from the top down. Please give Matthew a warm welcome to the stage.
Good morning, everyone. I see a somewhat small Bitcoin army out there, but nevertheless an army, right? Okay. This is my second time in El Salvador. It's a beautiful country. Thank you to Galoy and Bitfinex for hosting. I agree completely with our previous speaker that we need a Bitcoin X, a country that accepts Bitcoin as taxes, but before that, we need to find a country that's not going to sell that Bitcoin once they get it as taxes. So that's some of the work that we've been doing here. You know, very simply put, at VanEck, why we think we need Bitcoin. For those in the room, I think it's quite obvious. There are 15 major currencies which are down more than 20% this year alone versus the dollar. We need Bitcoin for the sex workers. We need Bitcoin for the climate deniers. We need Bitcoin for the Russians. We need Bitcoin to stop the censorship of money. I have to say there are some troubling things that are occurring in this arena. The Bitcoin wallets of the Canadian Truckers Coalition are still frozen. So there are some tremendous regulatory headwinds in this arena, and we need those of you in the Bitcoin army to fight and stand up. We need Bitcoin because the poorest countries are still paying the highest remittance fees in the world. This is a study from the IMF which says remittance corridors dominated by banks and few players are characterized by higher fees. So what the Bitcoin army is doing is bringing competition to parts of the world that are dominated by cronyism. That's very powerful work. So just a word on VanEck. We're no longer an $80 billion asset manager. It's more like $68 billion. The majority of these assets are in ETFs and mutual funds. We're best known for the gold mining ETF, GDX. So our founder's father pivoted his mutual fund into gold stocks in 1968. It was a hero call. It built our firm. We are very attuned to Bitcoin's potential disruption, and we've spent the last 5 years investing across the space. So private equity, venture capital, direct investments in crypto exchanges like Gemini. We own an indexing subsidiary which has 40 different digital asset indices that asset managers use to benchmark their crypto funds. We're running our own node operations. We have a community NFT project. So, I'm not representing a maximalist organization. We all have our different views. In our view, if Bitcoin is going to succeed, it needs strong institutional adoption. It needs adoption at the sovereign level. It needs countries to hold Bitcoin and hold them as part of their central bank reserves. But we're participating broadly across the space. We have 19 different digital asset strategies. A number of these are Bitcoin specific. We were among the first to file for a physical Bitcoin ETF that has never been approved. It is unlikely to be approved with the current regulator. But we have Bitcoin futures strategy. We have a Bitcoin miner strategy. We own and HODL Bitcoin. and we run 3 actively managed digital asset funds in New York with a team of 10. Happy to speak with all of you about these. My genesis block, so I started my career as a journalist at Bloomberg and CNBC. I saw firsthand how fake news is created. Underpaid journalists, disintermediated by Google, scrounging for clicks. Truth be damned. It's not a pleasant industry. I got disillusioned. I got my CFA, moved to the buy side, spent 4 years working for Cathie Wood at AllianceBernstein, covering tech and Web 2. And I moved on from Cathie into investment banking, but I always had in the back of my mind, what technology is going to disrupt these Web 2 giants? What is going to take margin from these companies? It's either going to be regulation or it's going to be technology. I got conviction that cryptography was the technology. Bitcoin is killer app 1.0. Right. Some of you may disagree. Smart contracts are killer app 2.0. So when COVID hit and journalism completely evaporated, I got conviction to leave investment banking, join VanEck full-time, where I manage one of our digital asset funds and run the research department. So, why do we like this community so much? It's a community of HODLers, of loyal people. This chart you may have all seen. The blue line is the amount of Bitcoin held by long-term holders. It's at a record high. Sorry, the blue line is the Bitcoin that's held in a loss. So that's at a record high. The long-term supply is also at a record high. You may remember when Stanley Druckenmiller, the famous hedge fund manager, described his thesis for Bitcoin. He said when Bitcoin fell from 17K to 3K, 86% of people didn't sell. So that's a very attractive backdrop for an asset class with a lot of loyalty. We are currently 365 days into this bear market. Bitcoin's down 77%. It's a pretty average bear market, isn't it, folks? So the question that we're trying to tackle in this work is, will central banks drive Bitcoin demand as they do gold? Central banks are a very important source of gold demand. They often outpace ETFs, coins, and bar demand. According to the World Gold Council, the official sector holds 18% of all the gold that has ever been mined. According to the IMF, bullion constitutes about 15% of total world foreign exchange reserves, and central banks have been buying gold aggressively over the past decade. Their purchases alone account for well over a full year of mine production just over the last 8 or 9 years. And if you can see the yellow box where I have highlighted, that is Q3, so June to September of this year, an all-time high in central bank purchases. So clearly, they're looking for something besides the dollar, right? They're looking for an alternative asset. They're choosing gold. What's it going to take for them to choose Bitcoin? Well, maybe we should study our enemies. Why do central banks buy gold? So let's start with the first reason. So historical position, 59% say highly relevant. Performance during times of crisis, 39% say highly relevant. Long-term store of value, inflation hedge, 41%. So the reasons why they do it is not necessarily to stand in. They do it to fit in because it's something that they've been doing for a long time, and inertia is a very powerful force. If you look at it at the bottom, why don't they buy gold? Part of de-dollarization policy. So no one wants to admit the truth, right? If you phrase it too clearly, they say, no, that's not the reason why. They're doing it for historical reasons. Well, that's one thing that Bitcoin has going for it, right? We're now 13 years into this asset class. Every year that it does not fail, I would say, increases the likelihood that some large actor will make a purchase. No default risk, 43%. We have that in common as well with gold. So is there a pointer here? No. So I'd say we need to do a better job of performing during crisis in order to get the central bankers on board. Okay, which central banks are buying gold? So on the left-hand side, what we have is the price of gold implied by the size of the monetary base. So what we basically did is we just did a theoretical exercise. Let's say that in each individual country, every single unit of their local currency was backed by an ounce of gold. How expensive would gold have to be for their reserves to cover their local currency, right? And it's a pretty interesting chart, right? So Japan, the price of gold would have to be $160,000 for them to have all of their local currency backed by gold, right? So that is obviously impossible. And you can see from the right-hand chart, the largest central bank buyers or sellers of gold over the last 5 years, Japan barely registers, right? They're somewhere in the middle. Now, if you look at the top of this chart, Russia, Turkey, Thailand, Saudi Arabia, these emerging markets have been running hard money for decades, right? They've gone through periods of currency devaluation. Their people don't trust the fiat as much, so they are forced to rely more directly on gold and gold purchases in order to create confidence in their currency, right? They don't have the nuclear weapons and the tanks that the US has. And it's pretty interesting that Russia, Turkey, Thailand, Saudi Arabia, Russia, Turkey, Thailand, all among the largest buyers of gold over the last 5 years. India is a pretty interesting one to look at. They're not too far behind on how hard they've been running their money, and they've been a major buyer of gold over the last decade. So these countries are likely to continue. You'll notice that the UK, right, Australia, they're not even on the list of gold buyers. They've given up, right? It's impossible for them. So we would think that these richer, more developed countries have a lower probability of making like a big bang adopting Bitcoin or buying Bitcoin for the central bank. Okay, so the analysis that we did is we took the Chainalysis 2022 Crypto Adoption Index and we ran it through our proprietary macro model, which captures 17 different risk factors. And we use these risk factors when we are analyzing emerging market bonds. So we run some EM bond strategies, actively managed. This is a bit of an eye chart, but we're screening for solvency risks, liquidity risks, structural risks. There's 17 different factors here. And what you find is that what these emerging markets with high Bitcoin and crypto adoption, according to Chainalysis, they share several characteristics in common. So here's the map, right? So the orange, this is the average of where all the countries score, right? The lower middle income aspirants, they're scoring poorly on ease of doing business. They're scoring poorly on GDP per capita, so they're poor countries. They're scoring poorly on the fiscal balance, so how much revenue does the government take in as a percentage of GDP. A couple of the interesting ones to point out on this page. Oops, how do I go back? Okay, so what you'll see from this page, right, just to like show you, right, so government revenue to GDP, you've got India and Pakistan screening like bright red, 1.77, 1.42, so they are multiple standard deviations worse than the average lower income emerging market country. Okay, so now that we have these characteristics, we can do some predictions, right? What countries currently score low on Chainalysis' crypto adoption index, but score poorly on some of the metrics that correlate with high crypto utilization? So one way that we can do that is we look at the ease of doing business, right? So this basically measures the dysfunction of a country, and when we find a wide variation between the ease of doing business and the GDP per capita, we can observe that something is ripe for disruption in that country. And obviously this country screens for some of the most dangerous places on earth, but you'll see that Central African Republic does appear on the list. So to my Bitcoin army who have a lot of balls, please go to these countries and talk to the leaders. Another characteristic that we look at is high dollarization and a low credit rating. So if we go back to our heat map, what you find is that high dollarization correlates with high crypto usage. Why is that? It's because countries that have abandoned their currency once before may be willing to do it again. There's a bit of moral hazard there. And interestingly enough, at the top of this list, if you screen for high dollarization ratio and low credit rating by S&P, you have El Salvador right at the top. And some others that stand out, Belarus, who's already in selective default, they would probably need a new leader or an end to the war in Russia. Lebanon, where all the banks are closed. Laos, with their landlocked hydropower surfeit. And Turkey, who's among the highest. So these are some to look at. Moody's says high dollarization is a structural weakness, particularly for banks in many Latin American countries. Okay, so we've done a little bit on who's likely to adopt Bitcoin, but we also have to study our enemies, right? So CBDCs essentially are enemies to Bitcoin. When we ask, when the World Bank asks countries, why are you issuing these CBDCs? They say they're doing it for monetary policy implementation, aka central bank ease of doing business, right? Not regular people ease of doing business. Financial inclusion, that means a lot of different people, a lot of different things to a lot of different people. Payments efficiency, but interestingly, it's domestic, right? Look at the CBDCs that have been released. They're for domestic use. They're not really for remittances, because many of these countries are afraid of open capital flows, afraid of remittances. The countries that are doing this are probably less likely to adopt Bitcoin. Okay, just a few words on El Salvador specifically, where Van Eck has been owning El Salvador sovereign debt in our actively managed emerging market debts strategies. This is the issue that matures in January of next year, where the government has made a tender offer. The price of this bond fell as low as 65 cents on the dollar, so it was yielding more than 100% annualized. That's where the government offered their tender to buy back the debt. We did tender our bonds because the risk reward was very positive, but still this bond is annualizing yield at 61%. It matures in 2 months. So there's a lot of market participants who are thinking that El Salvador is still gonna default. However, we think that's unlikely. So we disagree with the rating agency's take on El Salvador. We see low default risk for these 2023s. Our general take is that the government has the capacity to muddle through coming years without crashing into sovereign default. By capacity, we mean optionality to borrow money or divert it from other parts of the public sector. We disagree with the rating agencies that this buyback was a distressed exchange, aka already a default. The IMF's charter requires it to accept and receive as form of payment any legal tender that country members have, and that provision specifically gives Bukele significant bargaining power to continue negotiating. You can see the progress that's been made in fiscal tax collection, right? So every Thursday, I think they parade people on TV who haven't paid their taxes. Like, there's definitely a more enforcement of tax collection going on, although they have not raised taxes. And this is a salve to El Salvador's fiscal situation, but there are risks worth mentioning, specifically the inflation that's plaguing all emerging markets right now, higher prices of energy, higher prices of oil specifically. El Salvador's oil imports have risen dramatically, and their foreign exchange reserves are beginning to fall. Remittances had been growing at 20%. They're now flat to negative year over year. So there are risks to the story. We are optimistic, however, that the country has a lot of bargaining power and that the IMF has become generally more lenient to debtor nations over the past few years, and that's likely to play out over the next couple of years as the political opposition hopefully fades. So we got excited when we heard about the Bitcoin bond, frankly, because of the potential to raise a lot of money, right? The Bitcoin army is loyal. They have a lot of money. They're going to invest in countries that show eagerness to adopt new technologies. The relationship between the Biden administration and Bukele is a function of this confounding variable, Donald Trump. It's not, in our view, a reflection of the natural state of affairs between the U.S. and El Salvador, and so we're hopeful that that relationship will heal. El Salvador bonds are cheap, and Bukele will eventually settle with the IMF. Okay, so these are my best guesses for nations with the highest probability of adopting Bitcoin. I'll just leave them there for you all to see. My time is up. If you want a copy of this presentation, follow me on Twitter and send me a DM. Happy to send the deck over. Thank you, everyone.